Are you wanting to buy a house but a little too scared to reach out to somebody to start the conversation? Stay tuned. Welcome. So, our home buyers, did you know that people who have bought more than one home, they actually have no clue what just happened when they leave the closing table with their keys? That is why people are so nervous to buy a house. Are you one of those people? Well, what I want to do is help you get comfortable with the home buying process, with what it means to buy a house, even just to start the process to fill out that loan application. So that's what we're here to do today. My name is Kelly. I have been a mortgage loan officer for 5 years. Before that, I was in new home sales for 10 years, and I have helped thousands of people buy homes over my career, and they are happy homeowners. And the greatest thing about doing this in my career is the fact that I help families grow wealth. So from that very first person who buys a home in their 20s to the person who is now in their 60s, I have helped many people over the last 20 years, and they are able to retire with confidence, create this great life for themselves, move up through homes throughout the years, even have properties. So buying a home is always the best bet. We'll get to that in just a few minutes. But I also just love everything finance, and my goal is to help as many people as possible. So that's why we're doing this today. So let's dive in. So one of the first things we talk about when we are trying to help somebody qualify for a loan, I always get the question, what loan program's good for me? Well, I don't know. We have to dive in. To pick your right loan program, there's 3 main factors that we're going to be looking at. One is we are going to take a look at your credit report. Yes, this will be a hard pull, and no, it will not ruin your credit score. Through the Fair Credit Reporting Act, there is actually a line in there that says that you can have your credit pulled as many times as you need within a 45-day period when you are looking for a big ticket item like a mortgage. As many times as you need it will not affect your score, or it'll only affect your score as if it's been pulled once. So that is something to consider. But first and foremost, we have to pull in a credit report. So don't be scared of it, as long as you don't go shopping at the mall on a Saturday morning and let Belk, JCPenney's, Dillard's, and Express all pull your credit. One credit pull for the purpose of a mortgage will not ruin your score. But what it's going to do is allow us to look and see where you're at, because maybe you might need to do a little bit of work, or maybe you are poised and ready to go to buy that new house. So we're going to pull in your credit report. We're going to get your score. There are 3 scores that come back, one from Equifax, one from TransUnion, and one from Experian. These scores are going to be different from what you pull on your soft pulls, what you get from your credit card statements. They are going to be different. Don't be surprised. I'm going to get these 3 scores. We're going to base your loan on whichever one's in the middle. Then from your credit report, the other thing that we're going to do is I'm going to go through your credit report. We're going to look for foreclosures, bankruptcies, judgments. We're going to look through collections. We are also going to see all the monthly minimum payments due across all of your accounts. Why that's important? Those monthly minimum payments due are what we're going to use to calculate the next thing that we're going to look at, your debt to income ratio. So let's say you have a credit card on your credit report and the minimum payments due is $25. I'm going to take $25. We're not going to take the $200 that you pay every month on the credit card balance. We're going to take $25. We're going to add that to your car payment. Let's say that's $500. So we're going to take $525. We're going to add it to our new proposed mortgage payment. And then we're going to divide that by your gross monthly income. So gross monthly income is the income that you are paid before taxes, insurance, any deductions you have on your pay stubs come out. So we're going to take that gross monthly income number, divide it into your total debts plus that new mortgage payment. That is called your debt to income ratio, which is the second thing that we're going to look at. And so we've got your credit score, we've got your debt to income ratio. The third biggest thing that we're going to look at is also your assets. So do you have money for a down payment? Do you have money for closing cost? Will you have money in the bank left over after you close on the home? Those three factors will actually bring a lot to the table for you. And so the more money you have to put down, sometimes the better off you are. But I do get a lot of people that say, well, I don't have 20% to put down. That's fine. That is completely fine. Actually, very few people ever put 20% down nowadays. With the price of homes and things like that, there are so many programs out there where you can put as little as 3% down for a first-time home buyer. There's grant programs that can actually help you with that 3% down. And then there's even a 1% down program out there and everything in between. So don't be scared because you don't have this pile of assets. But what we do with those three factors is I take them all, I put them all in my program, and I work through different scenarios for you. So we take those three areas, and you might be thinking, oh my goodness, mine are not good. That's why you start the process early. So if your lease is up in April, and it is now August, and you are thinking about buying a house, so you do not renew that lease again. A lot of people are saying, well, it's too early. I cannot start, Kelly. I am not gonna start this early because I'm just gonna get my hopes up. No, now is the perfect time to start, because what we're gonna do is we're gonna set you up so that when you get to the point where you wanna go shopping in February, March to get out of that apartment by April, you're gonna be set up. You're gonna have savings. You're gonna have confidence that you can afford the home. I'm gonna tell you how in just a minute. You are also going to your credit's gonna be great because we will have had time to work through everything. So, first step to working through everything, I'm gonna look at your credit. Did you know that on your credit report, the available balance to used balance on your credit cards makes a huge, huge difference. Now, the biggest thing that makes the biggest impact on your credit is your on-time payments. So make your on-time payments. That goes without saying, but I'm gonna say it anyways. Make on-time payments. That is what makes up 35% of your credit score. Then we're gonna go to how you actually use that credit. So when you have a $10,000 available balance on a credit card, you want to use less than 30% of that, or $3,000. And honestly, if you're trying to buy a house, I would try to get that down to zero. But use as little of that available balance of your credit card as possible and work towards paying it off, because what that's going to do is that is going to boost your credit score even more. And if you start early, you're going to have time to do that. So just credit cards, pay them down. You need help, we can talk through that. It's all about budgeting and creating the life you want to get ready to buy that house. Because did you know that home ownership is the path to wealth for almost every family out there? That is how most of today's millionaires actually started building their wealth, by owning real estate. So that's why we're doing this. Maybe it's not why you're doing it. Maybe you're listening to me talk today because you want to have a house where kids can run around, or you want to actually decorate your own walls, because most renters, you can't go decorate your own walls and paint your colors and stuff like that. So dream about those things. We'll talk about goals in another session. But right now, we're talking about getting ready financially. So pay down the credit cards, pay down everything, make your on-time payments, and don't go open any new accounts. There's no reason for that. Also, one of the other things that I see a lot is when we're prepping for buying a house, people start paying off their credit cards and then they close them, close the account. Now what that does is, let's say you've had a credit card that you signed up for you when you were 18 and you are now 30. You've now had that credit limit for this amount of time. You close it, you have just cut your credit history by 12 years or more. So don't close the accounts. Keep them open so that you still have that great credit history showing on your credit report. That's a big factor. And so doing those things will help you prep. The next thing that I want you to do is I want you to budget. So budgeting is, as Dave Ramsey says, a 4-letter word to a lot of people. Budgeting is really only telling your money where it needs to go. So taking your paycheck and let's divide it up and tell it where it needs to go. Now, part of this, when you're prepping to buy a home and you start early, is we're gonna make practice mortgage payments. Because you know what? You might fall in love with a home that is a little bit more expensive on the monthly payment wise than what you are paying right now in rent. So let's say your rent payment right now is $1,500 a month. Let's say your new mortgage payment would be $2,000 a month. What I want you to do is we're gonna practice paying that $2,000 a month to get you comfortable. The biggest thing that this does is, one, it's going to get you comfortable with making payments that might be a stretch. So if you think your payment's gonna be $2,000 a month, maybe you try $2,200 for a month. And how this works, you're gonna pay your rent, pay your $1,500 to your landlord. That other $500 is going to go into your savings account. If you don't have to dig into that savings account by the end of the month, you have $500 in your savings account. You've also gained some security that you can afford that monthly payment. Let's do it another month and another month. If you don't have to dig into that savings account and start going after that money after you make those practice payments, that shows you you can afford that monthly payment. You'd be surprised. A lot of times when we just have extra money in our checking account, then we go to an extra dinner. We maybe go and buy that extra pair of shoes, or go do that extra thing that we really weren't gonna do anyways. And that is why so many of us Americans live paycheck to paycheck. So making practice payments is gonna help you get out of that mentality. It's gonna force you to save money for that down payment, for the reserves, for everything. And it's gonna give you that security. And I actually started recommending this about 3 years ago to some clients. I had a client, he said, I can afford $2,400 a month in monthly payment. I said, okay. His debt to income ratios were a little bit tight, but he qualifies. So I listened to him. We got under contract. He got the monthly mortgage payment, all of the information, and it was $23.97 a month, including taxes and insurance. He spent 3 days and canceled the contract because it became too real to him and he didn't think he could afford it. So don't get under contract and spend all this time looking at houses and fall in love with a house just to panic. That is why we do the practice payments. That's the biggest reason we do them. The added benefit is what I just said. You get some extra savings with it as well. So practice payments, creating a budget. If you need a budget worksheet, let me know. I've got a budget worksheet. There's also some amazing apps out there that you can use. Some are even tied to your bank account that you use now, where you can just allot every dollar. So create a budget, practice payments, let's work on that credit report, and let's get some coaching. So those 3 things are gonna set you up to buy your next house, to do the things you wanna do to help you build wealth. My greatest joy in life is helping families create this life that they want in their new homes. So when you are thinking about doing this, let me know how I can help, because oh my goodness, it's such a joy to own your own home, walk in, you kick your shoes off, in your house with your beautiful painted home, in a home you know you can afford. Thank you so much for watching. We'll see you next time.